Welcome back to the ticker. I'm Shauna Smith, checking in on the market action. We're still seeing a mixed picture. The S&P, though, flipping into positive territory just slightly. Sector-wise, we're seeing the biggest gains in communications. That sector up around 0.5%. We're also seeing some strength in real estate and technology today. The Dow, though, still moving to the downside, off 59 points with 3M as its biggest loser. Well, checking in on the price of oil. So crude is currently trading, let's see, to the upside, up just 9 cents at $57.75 a barrel. Now, crude is on track to notch a fourth straight session gain, but worries over a slowdown in energy demand are still keeping prices in check. Joining us now from the CBOE trading floor is Alan Nuckman, Chief Market Strategist at Agora Financial. And Alan, when we take a look at energy overall, I mean, it's been a pretty the sector has been underperforming. It's the second worst performer sector-wise so far this year. A lot of energy stocks have been beaten down recently, many of them flirting with bear market territory. What do you think it's going to take for investors to change their mind about energy in the second half of the year?
Well, I think we've had a healthy bottom put in place. We've seen the energy market. We've seen crude oil trade between 50 and 55 for 3 weeks back in June, and then it broke out of that bottom base and it rallied to 60. So we've seen an overall stall in the macro market here in the last couple of sessions. You know, some summer sessions where we backed off just a bit after making highs. You want to look at how the overall market does, because that obviously has implications of what the energy markets are feeling from a demand standpoint, and where the worries about global slowdown have slowed. So I'm looking for this energy sector, crude, to get back above 60 and stabilize, and that could be very much a positive for a lot of stocks that have suffered but offer opportunities at these levels.
Alan, even if we do see crude get back above that $60 level, that's a key level I know that a lot of traders are watching.
Right.
Could we still expect to see some volatility in prices of crude here going forward?
That's what the crude market does. It overshoots on the downside, overshoots on the upside. It's a very volatile, emotional market. That's a function of it. But what has happened in the last few years, to be honest with you, when I was a young trader, you'd get a lot of geopolitical news that would have a major impact on the energy market. It really doesn't have that much effect anymore. Something happening in the Middle East used to cause a $5 or $10 move in crude oil, and because we are such a major producer here in America, you know, it's smoothed out and it doesn't have any price pop potential the way we had. But it does set the tone, an underlying base and support for the energy market, because anything could happen anywhere in the world, and we're always on a razor's edge as far as supply goes. So, you know, that's what supports that market at all times.
Alan, how long do you think that can continue for? Because if we still get headline after headline of geopolitical risk, I would think at some point investors will take notice of that, and that will, of course, then become really the driving factor in the price of crude.
Well, I think what's more important is that you'll see the crude oil market catch up to what we've seen in stocks. Stocks have had a full V recovery, rallied all the way back and made new highs. Crude hasn't done that yet. But if you look at the charts, you look at the fall that we saw back in December, and you look at the recovery that we saw in January, they were mirror images of each other. So it looks like it's just lagging behind, has to play a little bit of catch up. But I think if you use crude oil as a barometer of global economic activity, I think you're going to see that growth come back as the tariff tirades, tires here, and people will start to focus on, overall the global economies are doing pretty well.
Hey, Alan, how closely are the traders down there watching the Fed's next rate decision, and what do you think that could mean for the price of crude here in the short term?
Well, here in the short term, there was a close to a 50-50 chance it was going to be a half-point cut about a month ago, but now that's been taken out. There's a 90-some% chance it's going to be a quarter point. So the rate cut is coming, that's for sure. So that's already factored in. I think, the issue is going to be, what are the next steps after that? Are there going to be future cuts? And where are we going to go from here? But right now, we're kind of in a holding pattern. I think we're disappointed. Some people were a little aggressive in their anticipation of a full 0.5% cut, which is not realistic. Let's remember, we haven't cut rates since the financial crisis. So we're reversing course from even where we were last year. Everybody was expecting multiple rate hikes. So this is a little bit of a unique situation where we've seen political pressure bend the Fed to get them to do what they want. So let's see how the markets react. But Again, my focus is on the macro market, looking at overall stocks and the fact that, we made those new highs. We could see a market melt up here this summer. Looking at the technical pattern, that full V recovery, we could see, the markets move another 8 to 10% higher just based on the distance of that drop on that old top. As we've seen every time in history, the markets have recovered from their sell-offs and gone up the distance of that sell-off. So until that doesn't happen, we just have to follow what's happened in the past.
Yeah, and speaking of the macro markets here, earnings season set to kick off in just a couple of days from now.
Right.
Obviously, a very low bar in terms of what we are expecting. Do you think earnings are going to disappoint, or what are you expecting from this season?
Well, it comes to the choice between treasuries or stocks, and there is no choice. We've seen how interest rates continue to decline. Looking at the numbers for stocks, we've seen this game before. We have a very low, they're expecting a negative 3% growth, so, anything positive would be very much a positive. Let's talk about positivity, and let's talk about the fact we're in a bull market. We have been for 10 years, or close to 10 years, I guess now. But let's talk about how the positives have overcome some extreme negatives, some things that I haven't seen in my lifetime, and I've been trading for almost 30 years now. So the ability for the markets to overcome, trade wars and everything else, I have to view that as a positive, that there's an inherent tone of strength in the market. And like I said, investors don't really have a choice. If they want to get yield, they have to go into stocks, and that's where their money flow is going to go until things change.
All right, Alan Nuckman of Agora Financial, thanks so much for joining me today.
Thank you.
Well, straight ahead, the Bulls are charging behind Netflix after a new season of Stranger Things smashes records. We've got the details next.